Welcome everyone to our weekly Forex market analysis call to prepare for July 17th to 21st, our trading for this week. Just a quick disclaimer as usual before we get started. Trading is a risky business and markets have been volatile, so please be careful with your money. And if you have questions about your individual investment needs, I recommend you talk to your investment advisor. So this is for educational purposes only. All right, so today we will start off by taking a look at our calendar, which is the first thing we want to do. Going into this week here, today, this evening, we do have GDP numbers from Australia as well as industrial production numbers. So this is red news, and it is important for China, but more importantly, it is also important for Australia and New Zealand. So if numbers come out positive here, there will be Australian dollar and New Zealand dollar should react positively to this because both Australia and New Zealand are big trade partners with China. And going into Monday here, we have CPI numbers for Europe here, as well as for New Zealand and monetary policy meeting minutes for Australian dollar. So these minutes are important because now we are seeing a shift in the central bank stance. We are seeing that Bank of Canada has already raised rates, and now Bank of England has been talking about potentially raising rates, and then we have seen ECB wanting to cut back on the monetary policy as well. So banks are turning where we have had really low interest rates since 2010. Now the banks are starting to change their stance. So as a result of that, if Australian monetary policy meeting minutes show that they are turning hawkish as well, so either they are wanting to reduce their the supply of money that they're putting into the market, or if they're wanting to even talk about interest rate hikes. So this will be bullish for Australian dollars. So this will be very important for Australia right now. And then Tuesday we have CPI numbers, which is inflation, another good or another important number. Greg, yes, raising rates is a good, well, it's good for the currency. It actually dampens the economy a little bit because when we have low interest rates, banks are able to lend money at really attractive rates. So businesses want to borrow the money and they want to invest in their, whatever their, the companies, they hire people, they train people, they buy machinery, that type of stuff. So they're investing in the business. But when the economy, so that's what central banks have been doing so far. They have been just giving easy money. So that's why we are able to borrow, or the businesses are able to borrow at such low rates. But now that the economic growth has happened, so we are seeing from everywhere, essentially, we're seeing positive numbers in all the different countries, like CPI here, for example, for the British pound. If this numbers comes out positive, it's at 2.9%. And the mandate for the central banks is they wanted between 2 to 3%. That's their benchmark that they want to see CPI. So when CPI or inflation becomes too high, then it means that things will become very expensive, and central banks don't want that. So they want to kind of dampen that effect. And as a result here, if the CPI comes up positive, that would be another sign that the Bank of England would want to raise rates. So they raise rates to sort of kind of pull back the support they have been putting out into the economy, because economy is doing well already and is like kind of starting to remove the training wheels. They don't need to provide that support that all the different economies needed after the big financial crisis. So that's kind of where we are heading now. So this number will be important. Like I said, CPI number for Euro, ZEW economic sentiment will be an important number here. And then, of course, we have Bank of England Governor Carney speaking. So before it was all about politics, now it's all about central bank. So again, if CPI comes out positive, then market will definitely will be looking at Bank of England Governor Carney here to basically gauge whether they are going to talk about raising rates, or how or when they're likely to do so. And Wednesday here, important number, building permits. This is a leading indicator, so it's always important. On Friday, the numbers that came out for US were weak, and that's why we saw everything else rally against the US dollar because of such weak numbers. And if the numbers continue to come out weaker than expected, that basically pushes the rate hike further. So right now, the next rate hike is expected to be in September, but with Yellen's testimony last week, that was a dovish testimony. So she did say that they're going to continue raising rates, but then she was also concerned about low inflation, because inflation for the US is at 1.1%, so 1% or something. So it's quite low, and so she was concerned about that. She expressed concerns about that, which is negative for the US dollar. And then we had weak data, which then did not support the interest rate hike as well. So if we continue to get weaker numbers, that means market will not expect an interest rate hike in September, and we're likely to kind of have that pushed back into December. So that's where it will be negative for the US dollar. And then we have, of course, crude oil inventories. This will be important for Canadian dollar. And then we have employment numbers for Australia again. And then Bank of Japan monetary policy. So two central banks, or actually three central banks this week. Monetary policy for Japan. Japan is one of those countries which is still following a relatively kind of dovish. They're dovish still. They're not talking about raising rates. They want to continue to put money into the economy. So that's why we are seeing Japanese yen taking such a hit against everything, especially the British pound, where Bank of Japan is hawkish and Japan is actually, Bank of England is hawkish and Bank of Japan is dovish. So it's completely, they're going in the opposite direction. And that's why we have seen pound yen jump up so much. So that's from fundamental perspective, that's a trade that's quite bullish at the moment. And then we have, of course, a press conference. Again, market will be looking to see what they're going to do. And then we have ECB, European Central Bank, coming out the same day. So they are supposed to talk about interest rate hike. And they haven't done one, and market is not expecting one. But what the market is expecting from ECB is to kind of start cutting back on their asset purchase program. So what they do is they purchase assets from the bank. So that's a way of putting money into the economy, giving money to the bank so they can lend out. And if they start talking about cutting back on their asset purchase program, that will be hawkish for euro, and it will likely go up even if they don't raise rates. So that's something to keep in mind there. So big, again, it's a big central bank week. Again, three central banks talking. And then we have Reserve Bank of Australia here, Assistant Governor DeBell speaking as well. So all in all, a busy week. CPI numbers for Canadian dollar here, retail sales number for Canadian dollar, that will be important as well. So a big week. So two important trades to sort of keep in mind: pound yen and CAD yen. So Canadian dollar is very bullish right now because of the bank raising rates, and the interest rate hike they did was also a bullish hike. So they're basically saying economy is doing better, and they're likely to continue, or it is likely to continue to do better. As a result, that was a very bullish hike compared to what the US had done. So Canadian dollar, so CAD yen, long is another trade to sort of keep in mind, and it may be one of those buying the dips type of thing. I wouldn't go buy it right now, but this is definitely the bullish trend is in place there. All right, so that was our fundamentals. Now let's take a look at Euro Aussie. This is just one of the trades that we took in the trade room. This has been very bearish as well because Australian dollar has been so bullish. Okay, so let's take a look here. We are looking at Euro US dollar. We'll start off with the week. So looking at the week, so this is very bullish overall. Week over week, it has been very bullish. We were at the bottom here, and now we are all the way into the top. So based on the close here for the week, so we had a bullish pin bar, and now we have a bullish close right into the highs. So this looks very bullish. Uh, gold is bullish as well, but okay, so but in terms of fundamentals, the pound and yen, they are diverging right now, and so are CAD and yen. Both the central banks are diverging from just purely fundamental perspective. Okay, so the next one here, we are looking, we are going to aim at the top of this pin here, which is, then we're kind of getting into the high. So we haven't been out of this. So if you take a look at it from purely from range perspective here, this is the range we have been in. So this has been a range bound pair for quite some time. So if we move this to the very bottom here, this is the range that it has been trading in since January of 2015. And we haven't broken the range for the last 2 years. Now we are at the top of the range, or moving towards the top of the range. So the two targets to keep in mind would be, first one 1.1620, and the second one 1.1720. So those will be the two targets towards the top of this range. But do keep in mind, as we get closer to these targets, there would be sellers sitting there. So bear that in mind. But for now, we are bullish, and we are aiming towards 1.1620 would be our first target. So if we go into our daily here, let's go take a quick look. So here we are. So price has been, just looking at the weekly, see how price stayed. It broke through this level, stayed above this, and now it's continuing forward. So that's bullish. The close on the day here was very bullish as well. And now we are into the highs of from this previous week. So this is where we are looking at, but this in itself is a range. So we're going to look at the break of this range at 1480. So once it breaks through to the other side, and then the move, let me just draw out the move that we can watch out for, is price breaks through, pulls back, and then does another move higher. So that's what we're looking for, targeting 1.1620. Okay, so bullish euro. Pound dollar. Here we are, a huge move to the upside in pound. Pound, like I said, with the central bank being hawkish here, it is pulling up, or it's pushing up into the high. So now we have, at this point, all of this Brexit stuff is already chewed up, and now we are into these. So we're going to start moving into this particular range here, because we have broken out here. So this is where price was having trouble. It pulled back, and now it has broken out. So next move we are looking for, or the target we're going to look at, is right there. So 1.3140. So let's say 50 mark. Yeah, so 131.50 will be the next target to the upside, but it certainly looks bullish. And following that, we are into 132.60 level. Okay, so that will be the 132.60 will be the next move to the upside, or the target to the upside. Oh, excuse me. So from weekly perspective, as we can see, very, very bullish candle. And now we're looking for next move up. So we're looking for, in this one, because it has been such a big move, we are looking for a pullback. So we're looking for price to come back here, hold above this previous 130.50 level, and then make another move to the upside. So I would wait for a pullback and then a further move to the upside if it stays above this range. If it comes back into the range, so sometimes what happens is market gets a little bit too excited about stuff, so breaks out and comes back and does one of these. So be careful with that, with this one. But we have been seeing positive data from England, UK, and with Bank of England coming out and already talking about potential discussions on interest rate hikes. So this could go further. Dollar CAD here. Dollar CAD is another pair that has been, like I said, from fundamentals perspective, this has been quite, dollar CAD is bearish because Canadian dollar is very bullish at the moment. So this is when they started talking about interest rate hikes. And then, and we, as we can see, they actually did an interest rate hikes, which is big here for Canadian dollar. Yeah, for the British pound, there is geopolitical risk because Brexit hasn't gone away. So that's where I'm saying market may be getting a little bit overly enthusiastic about that because they're not, like, Brexit's not going to go away. So we still need to deal with that. And once they start talking about Brexit again, we'll see a negative impact on the British pound. But for now, the focus is on the central bank as opposed to Brexit. And as a result of that, we are seeing the positiveness in the British pound. Yeah, so dollar CAD, we are bearish. I'm bearish on dollar CAD, looking for a further drop, but again with this one as well. So weekly candle is bearish and we are looking for a continuation, but we may get pullback into this level 127.70 and then looking for a further drop. The target in this case is 124.70 level, this pin to the downside. So that's the type of move I am expecting. Yes, I agree. Here we go. So this is where we are currently. We just need to squeeze back a little bit. So in this case, two different depending on what the market. Sometimes when we see big Friday rallies, they kind of tend to go in the opposite direction in the beginning of the week because everybody who was long, they're booking profits and so forth. So do keep that in mind. But we are looking either for this pullback, so into 126.80 and then a drop, or I'm looking for a test of 127.70 and then a drop. But in either case, I'm looking for a move to the downside into this 124.70. So right now, this inefficiency is open, and with this, it will go and fill the inefficiency. So that is open. Greg, these arrows are, it's one of the indicators that I am testing out at the moment, but I haven't actually really had the time to sit down and do some back testing on it. So right now I'm just leaving it here. And once I have, they're fractals, sorry, they're fractals. So once I have a little bit more data and time to kind of test them, it was one of our dear friends here, Walter, who suggested that I look at it. So I'm liking what I see so far, but I haven't really had time to sit down and go into it as much as I would like. So I will talk. I'll do a webinar on it once I have something, something that I can kind of formulate that I can say. So dollar CAD bearish. Aussie dollar. Aussie has been surprisingly bullish, and part of it is coming from Canadian dollar strength as well. So that's something to sort of keep in mind here. But we are into the highs. So with dollar CAD, we are not quite into the lows, and dollar CAD has the central bank, or Canadian dollar has a central bank behind it saying we're going to raise rates. This one doesn't yet. So unless if Australian Reserve Bank of Australia comes out and says that they are, or turns hawkish and they start talking about potentially raising rates, then this will be bullish. Otherwise, we are coming into the highs here. So based on the weekly close, we are bullish, and the next target will be 79.35 here, and then 80.20. So those will be the two targets to the upside. But this one, if the central bank is not quite as hawkish on it, we could see the price drop because we are right into this this upper level here, and those are the levels. So there are like 2-3 levels still that we could a price could go higher, but we are into this level here that we haven't kind of touched since January of 2016. So from here, we are likely to pull back a little bit because there is central bank later on. So bullish here. So this is the move that I'm expecting for Aussie dollar. This one I'm a little bit more cautious on though, and I will be looking to see if it turns bearish, then this would turn into a sell. So this is not as clear cut as the other ones, just because we are into the highs here. And from fundamental perspective, RBA hasn't really taken a stance, a bullish stance yet, which could change this week. And if it does, then we are looking for even further into this one here. So 8,200 could become available to us, 0.8200. It could even go higher because if central bank gets behind this, this is going up. But for now, I'm going to be cautious here, looking for a pullback into 77.50 and then a further move to the upside. So bullish on Aussie dollar. Let's go take a look. As we can see, price has broken above these previous highs, and this was very bullish on Friday. So looking at pull back into this. So looking for price to pull back into 77.50, hold above, and potential trade will be there. So looking for a move higher once the price holds above 77.50. So that is bullish for Aussie dollar. Yeah, I'm glad you guys like the weekly analysis. Yes, here Art suggesting we look at futures here. So I would say, yeah, have a look at, keep an eye on dollar index here as well, because if dollar index turns more negative, that will have a negative impact on the US dollar. Okay, so this one is New Zealand. New Zealand is bullish, but we are into resistance here, this at 73.70 level here. So we do have a couple of targets to the upside, but we are coming into resistance just like with Australian dollar here. So, and New Zealand dollar hasn't been, for some reason, it has not been as hawkish as Australian dollar or Canadian dollar. So keep that in mind. So this one is bullish still, but into resistance. So that gives it a bit more of a neutral bias. So bullish to neutral. Next target looking at 74.80 level. And if it does go beyond that, then we are way back here. So it could go all the way to 77.50, but not expecting that in the coming week. I think that will take a couple of weeks. So keep that in mind. Okay, so that's what we are looking for. Again, the move in this case as well, we're looking for a break. So in this case, I'm looking for a break above, a pullback, and then a move higher. So this one is already in the range. It hasn't broken out, so we have to wait for the break. You guys, can you please stop drawing on my charts, please? Thank you. So this one we have to wait for the break, pull back, and then a further move to the upside. That's the scenario would be looking for in this case, which is slightly different than the Australian dollar because Australian dollars are already broken out. So in that, we are looking for a pullback and then move higher. This one, we are looking for that break to the upside first. So here we are, as we can see, like I mentioned, it's at the top of the range here, testing the highs. So we need to see a break above this. So we need to see a break, a pullback, and then a further move to the upside. So this is not quite ready for a long yet. So we just need to kind of give it time to break, go above, and then stay above. Overall, though, New Zealand dollar, we are bullish. Here's our pound yen. Pound yen has had quite a move to the upside. It came back to test this level. Now it's holding above. It is looking quite bullish, but it is going into resistance. So from weekly perspective here, looks bullish. It has a bullish pin bar on a weekly, which suggests further move to the upside. But we are into the highs, like I mentioned. Next target I'm looking at is 148.80 level. And then beyond that, we are going to be back into this 152.30. So that will take some time. So prior to that, so 151.40 level here. So yeah, so 148.50 is the first one. So this is where we are. So this is the next target, 148.50, which is kind of into the highs here. This one again, it is bullish, but we need to see a break above the level, pull back, and then a further move to the upside. Yes, I always look for pullbacks first, and then we are looking for further move up. But with this one, because let's say if Brexit fears come up, or if we start talking about Bank of England basically doesn't come out as hawkish, that could have a negative impact on that, on this. So pound has more negative things that are kind of sitting aside for a while that could come back up. So that's something to keep in mind with this one, pound yen. Dollar yen looks very bearish. That was a big drop the other day. So the question here is, couldn't the move that has occurred to be considered a pullback? It is a pullback here. So it did pull back. See, right, it went up, pulled back, and that's why I'm saying we're looking for another further move to the upside here. But this is where once it gets into that high, we could see a deeper pullback, especially if fundamentally something changes, or geopolitically, something changes with the British pound. So that one is hawkish, but again, we have to be careful with that one. Dollar yen is bearish. So this is where we turned bearish. We had two pins here, and then this is the pullback that I'm referring to. When I talk about pullbacks, this is basically what I'm talking about. See, price drops, it pulls back up, and then does another drop. So this is the move. This is what it would look like on the charts. Drop, pullback, and drop. So this one, again, we are looking for another pullback in this one. Bearish on this. So I'm bearish on this, looking for that price to stay below 113, and then looking for another drop. The target here is 111.80. So bearish on this one, on dollar yen. And then we have, with the dollar yen, the only caveat is we have Bank of Japan coming out this week. And if they say we are not going to raise rates at all, that will be bearish for yen, which means it will be bullish for all the yen crosses. In terms of the pin bars, I just look at the shape of it. As long as the body of the pin is bigger than, or the body of the candlestick is smaller than the size of the pin bar, that looks good. So I like this type of a pin. That's totally fine. So looking for long tail and small body, basically. This one here, very neutral. Last 2 days have been very neutral for the yen. In terms of weekly closes, we are already bearish on this one from weekly perspective. Daily perspective, we are neutral. So in this case, it does not mean that it's just going to, it isn't going to go up. It just means that it's just going sideways, and we have to see what happens before we can take a look. So the pin bar, no, I like the pin bar to be 2 to 3 times the size of the body of the candlestick for it to be considered worthwhile. So here, this is what we are looking at. So the move here is this. So I'm looking for pullback here into 120, 130 level, and then a drop. The target to the downside is 128.20 level. So the bottom here, this is where I'm expecting it to go. But if Bank of Japan says we're not raising rates, this is going up. So then I'm looking for a test of the high here. So this one is neutral. And I think that covers everything. Aussie, Euro Aussie, this we are bearish on. So looking at a weekly perspective, but we are into support in this one here. See how it hasn't been able to break this support. So from that perspective, we are, this is bearish. So I'm looking for this as the next target, but it has to break this 146.20 level first. So this is like we looked at one of the other ones where we were waiting for a break, and then we like New Zealand dollar, we're waiting for a break to the downside here, a pullback, and then a drop. So this is not quite ready. It's quite bearish from a weekly perspective, but this could pull back. We have to wait for the break. before we go into this one. So it is, this is the area. So this is important support and resistance level. It has to break through before we can take this one short. But I am bearish on that. EuroCAD here, EuroCAD is bearish as well. Weekly close very, very bearish because Euro hasn't been doing as much, but we have ECB again this week. So caution all across the board here. So 144.80 is where it is currently. It is holding. This looks like what Canadian dollar looked like a couple weeks ago, well, or a couple days ago, sorry, when we were talking about it being bearish and holding below level. So this is where, let me just go back to dollar CAD so I can show you. So we were talking about dollar CAD holding below this level here. So it had broken down, and I was saying as long as it holds below this level, we're looking for a continued move to the downside. And so this looks very similar in that case. In this case, if it holds below this 14600 level, we are bearish on this. At this point, we do need to see a break below 144.80. But next target is 14400, which is right here, and then moving into this level. This is nice support and resistance. So 4350 is the next target to the downside. But again, the move I'm looking for here would be a drop, a pullback, and then another drop. All right, so that's all I have. Any questions before we wrap it up? Yeah, go ahead with the questions. All right, so I think we're good. I'm going to stop the recording here.